Good morning, ladies and gents. So today we're going to be doing the part 2 of the advanced liquidity breakdown. The first one, we looked at the gold bullish move, how we targeted that swing high, the buy side above the resistance, the swing high above the resistance where the liquidity is resting. So if you don't understand what that means, just go make sure to watch part 1. Otherwise, you're not going to follow along in part 2 because I'm not going to explain the basics again. Alright, so let's take a look at exactly what happened. So we got the bullish move, right? So here we were saying we had a bearish market structure shift, price traded up into resistance, creating the illusion that this is an area of resistance, sold off, took that high inside the resistance again and rejected, making it look like this resistance is holding after the bearish market structure shift. So we said we had a bearish market structure shift, an area of resistance, so we anticipate that the people will be going short and putting their stop loss there, and that is our target. And then we said let's take a look at the order flow. On the higher time frame, the order flow on gold was very bullish, so taking a long is a good idea, and also on the medium time frame it was very choppy, so looking for price action where we go up and down and back up is a good idea. So taking all of that into consideration, we framed a high probability long on gold in the previous video. So continuing exactly from that, both of these moves, I did call it beforehand, so I'm not bragging about it, it's just I like to only make videos and explain stuff that I called beforehand, because explaining something in hindsight is obviously very easy, anyone can do that. So you can just go and look at that timestamp there if you don't believe me, and go mark it on your chart and you'll see that it's this chart right here. Alright, so now let's see how could you have anticipated that the sell side, the liquidity, is the draw on liquidity. So this was what I was thinking at the time. We cleared the buy side on gold and we hit this body and we started to reject, and now we are coming back down. So let's take a look at what are people thinking here. They think bullish market structure shift, this candle closed nice and bullish, the next one continued with that. Okay, we left a fair value gap. So now we anticipate people to open their charts. They say, okay, order flow is bullish, we had a bullish market structure shift, and now we are returning back to this area of support now that was a resistance before. So they might be thinking that we have a fair value gap, we had market structure shift, inside of this fair value gap is also support. So bullish market structure shift, support, buy the support, stop loss at the swing low. So if we open, that's not the swing low I marked there, but if we just move down to the lower time frame, you would see that it is a swing low on the 4 hour. Yes, so you can see it again here. It made it look like price is respecting the support and the fair value gap by dipping in here and closing the body strong, and then started a small little bullish move at that time, New York on Thursday, but it was basically just a consolidation for price to take out the sell side again. So what you would say is there was a bullish market structure shift and price started to return to support. So when you think the term bullish market structure shift plus support, that should flash red lights in your mind. That is a A+ setup for shorts, because market structure is bullish, support is bullish. Then we do the opposite, same way how bearish market structure shift into resistance, A+ setup for longs. Bullish market structure shift onto support, A+ setup for shorts. We target this swing low on the 4 hour. You remember it was a swing low. You can see the update as price moved on. Sorry about that, I just had to pause the video. I had a little emergency with the dogs. I don't know what the last thing I said was, but So we're saying we have a bullish market structure shift coming down onto support, and I said that fair value gap plus support buyers stop losses are most likely resting at sell side liquidity at this area. So they are buying as we come in here. It looks like a market maker buy model. So there's more confluence for people to hop into buys. So that is why I was short. Okay, I was just keeping updating as price. You can see I annotated the market structure shift there, the buy side, the swing high above the resistance, and now we are coming back down to take out the sell side, and we have reached the sell side. Now let's go to the chart a bit and add a little more confluence to our trade idea. So I liked this. It took out the body, but it didn't take out the high. So the people who were long, it's clear that the short was the plan, right? In hindsight now. So the people that were long, that were looking for this high, they didn't give it to them. They stopped just before that because the plan was to go down. So when I saw it stopped at the body, and now it's coming back down to the support, I liked it even more because I said to myself, okay, so they are coming to introduce new buyers that also want to target that. These guys are already in looking to target that. So there's a lot of interest to target that now. These guys are already set up. There's new buyers coming in, but the targets haven't been reached. But we already created the bullish illusion and we're actually going down. So I liked looking at it like that, where there's still this target, but we actually flip bearish and we have buyers in and we're creating more buyers and we're stopping them all out with a nice bearish move. So you guys can remember I was also bearish on silver. The silver setup looked something like this. I think it did complete the weekly CRT I was looking at. I think this is what I have marked out here. Yes. So that was a drawn liquidity, but I just said I'm just going to look for that fair value gap. If you go and look on my Twitter, I did catch shorts. I can't exactly remember. Somewhere here, and then here, a new position. But anyway, so we have that idea in our mind. Remember what we said about gold. At that same time, to add more confluence to gold, maybe keeping its consolidation pattern or choppy pattern, or maybe even going down a bit more, in the back of my mind, I knew silver took out a big liquidity pool. So you can look at silver and say, we're not looking to short metals. Look how bullish silver is. We're not looking to short metals. But I was happy to short metals. Firstly, taking into consideration everything that was just said here, and then confirming that with some more confluence by looking at silver. And what do we see here? We had, let me just make it like that so you can see it clearly. We had a nice area of resistance, and what is above it? A swing high. So what do we say? We anticipate people to short the resistance and put their stop loss at the swing high, and that is our target. So the target for buy side liquidity was cleared, and we don't necessarily expect silver to continue with this very aggressive expansion. Maybe if anything, something like this for a while. I'm not looking at that now, but I was just saying, okay, gold is set up for a bearish move. But what does silver say? Because silver is trending very bullish. So how is shorts looking in general on the higher time frame? And that is how I confirmed that the order flow could be a bit weak, because this cleared liquidity, and it will still support our theory from the beginning, from the last video, where I said, yes, we are bullish on the higher time frame, but the medium time frame is choppy. So we can expect price action exactly like this. So as you can see, there's a lot to take into consideration, not just going on the 5 minute and saying okay, we have a bearish market structure shift and it's time to get into a short based on a pattern. That's not it. There's a lot of thought that goes into it based on the context, the logic, what's going on the higher time frame, where are we heading, where is the traps, where's liquidity resting. That's the type of thing I look at to determine where price is going. All right, everyone, cheers.